Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on euro currency. So yes, the market has turned down from the resistance area, completion minor ABCD pattern on the lower time frame that we have discussed. And actually it's around 150, as we said, 150, 160 will be resistance where potentially we suggest the market could turn down. Actually that has happened. So with this performance, market behaves absolutely normal, natural to developing of the bearish scenario. So everything stands well, absolutely reasonable. So currently you can see that market has dropped. I have marked this candle as a reversal, but for truth's sake, this is not quite reversal bars because close stands slightly above the lows. Well, it was very close, and forming new top and closing right around the lows will just mark it as important bearish candle right there. So market, as you can see, currently is flirting with the MACD predictor. Potentially, with ignoring everything else, that could give the bullish grabber that suggests upward action and taking out of this top. That might happen, I don't know, maybe on some dovish statement from the Fed or something of that sort. But in general, if we'll take a look at the performance that we have right there, so you can see trend stands bullish here with this direction on the MACD, but as you can see, overall price action is not bullish. It actually stands flat, with gravitating to the bottom right now, which is shows the signs of the bearish dynamic pressure starts growing. I'm not exclude some irrational price behavior on the Fed announcement. It might be that market makers could trying to shake the boat despite what the Fed will say. This very often happens, especially in the stock market, when despite what Fed telling, markets just start rising. Whatever they will rise rate for 75 basis points, 100 basis points anyway. But this rally usually turns down very fast and very soon. So some irrational spikes and outbreaks on euro currency is also possible. That's actually the most tricky thing when you're dealing with the important data release. But purely by taking a look at the technical picture that we have, first of all, I'm not really sure that this grabber will be formed here and whether it will really make some sense for performance, because overall picture stands more in favor of downside action. On the follow time frame chart, I suggest that it might be the butterfly pattern that's forming right here, and take a look at that first target of the butterfly is very close to a nearest target that coincides on monthly level. So remember, 97.50 is also extension on the monthly butterfly. So here's, you could see an agreement of the different targets. Finally, on the next target will be 96.60 approximately. This butterfly on the follow time frame chart. On the hourly chart, market has erased all bullish minor patches that was forming here. So if you remember, first we talked about the morning star pattern that was formed on the follow time frame chart right there. You can see the market should form some kind of the ABCD pattern that was completed with this. As you can see, actually we talked about this yesterday, and now it's already has broken below the pattern. So this pattern already has been erased. So upward action is done. Now as market is standing lower, and this should be treated as continuation of this one. So this was extension, retracement, contraction, and extension right now. That's why if you would like to take the position, you do not need to consider really big swings and big levels. You just need to focus on the most recent swing, because if market will jump up above it, well, it breaks the short-term bearish context. Only if you're thinking about some higher time frames, greater time frames on the daily weekly chart, you could take into consideration greater swings and far standing levels, including maybe daily confluence, even these levels. But if you're trading on intraday charts, you would like to take the fast position. All you need to do is just watch for these two levels, I suppose, for position taking. This was probable hiding stop somewhere either above this top or even above the confluence. you need just to save your money and control the risk, because currently for intraday trading it is not logical to consider two far standing levels. Because if it will be really bearish and market keep going lower, probably this confluence or at least this downside swing should stay untouched. The top of the swing should stay untouched. If it will be bullish statement from the Fed, diver statement, in this case probably the short-term bearish setup will be vanished and you do not need to hide stops somewhere too far. So this is just simple logic. Well, that's actually what we have on euro currency. Let's keep watching, guys. Let's see what will happen on the Fed statement release.